Thanks for choosing to click this video tonight, or today, or whatever time you are in this existence. I want to say thank you from the bottom of my heart. My name is UV the Great, and I am brought to you guys by the Unique Trading Group, where we talk about stocks and live commentary. So, first and foremost, I just want to say that this is not financial advice, and this is only for educational purposes only. So, let's get educated. Now, right in front of me, we have my book. Man, I just wanted to quickly plug in this. I think it was important. The title of this is The Power of Patience, Mastering Emotions in Trading While Turning Discipline into Income. And just to give you a quick, brief description of what the book encompasses, let's read together. This book is more than just a guide. It's a revelation drawing from personal experiences, losses, and triumphs. The Unique Publishing Group has forged a path that not only simplifies trading, but also makes it accessible to all. In the chaos of the market, discipline, patience, and a deep understanding of its nuances were found. The realization struck during the pre-COVID era, a time that reshaped lives, pushing many to explore new avenues of income. The mission is to demystify trading, making it less intimidating and more achievable, through countless hours of studying. It's what it takes, including masterclasses and over 10,000 hours of screen time. The essence of successful trading has been distilled into this book, from paper trading to transforming consistent wins into real accounts. The journey is a testament to the effectiveness of discipline and patience. The Power of Patience isn't just a book. It's your companion on the journey to consistency, whether you're a beginner or someone looking to refine your skills. This step-by-step guide provides insight, secrets, and practical tips that have been honed through experience. So, please join the Unique Publishing Group and unraveling the art of trading where discipline meets profitability. Let's turn the complexity of the market into a learning curve, making your trading journey smoother and more rewarding. To the world with the power of patience reigns supreme. All right? Okay, now, I don't want to waste any more of you guys' time. We all know what we came here to see. And so I want to give you a brief description of what I'm going, the area that I'm going this evening. First of all, we have inauguration of President Trump. And so there's a lot of pandemonium and a lot of, hype around this phenomenon. This is why I call the video Pandemonium. And I want to talk about SPY and give you some insights on what I think we should be doing forward, which is being very, very selective. We already have a 16% implied volatility and a 61 to 66% IV percentile in the option chain, which is suggesting a bullish to neutral environment where you have people are hedging, and it's not extreme fear, right, or greed, but it's right there at the middle where there could be some hedging involved, and they're not really expecting too many swings, but we are expecting some price movements. Okay, keep in mind, guys, that we also have earnings season is upon us, and so you want to watch for volatility, and you want to be very selective of the stocks you choose. This week is not the week to go in and go heavy on your option plays, heavy on your positions, because first and foremost, we have a short week. All right, today, depending on when you're looking at this video, the market is closed, and so opens up on the 21st of January 2025. And so if you don't know, now you know, like Biggie would say. Anytime you have a short week, it's low volatility, and people are kind of waiting to the sidelines to get a full body or full week, so to speak, of full volume, of true volume, like regular scheduled programming. All right. Now, as far as levels, hey man, we are above a 21. I'm on the 4 hour. Okay. We have a higher high. Okay. And on this daily chart, all right, we also have this interesting pattern here, okay? And so we're just waiting for a decision to be made. All right? I think that 594 is an area for pullback. If we get any downside, this will be the area that I will be watching to either secure my profits on puts if we see downtrend, the beginning of the week, or any time of the week. 594 would be the area I will be looking for to pivot and make a decision for the downside or upside. And or if we wake up Tuesday morning and the market is above 599 and or at 600, just know that there can be profit taking, because people who are holding swings that bought in right around here and are still holding, we have a decision to make. And the market sentiment is based around Trump getting into office, earnings, and the economic data, which is my last point. All right, that's what the video was going to be about, and it's all based around human behavior patterns based on auction theory. This is only a casino. All right, so let's get to it. Now, the economic data we have for tomorrow, which would be the 21st of January. Excuse me, guys. My apologies. So on the 21st, we have at 8:30 the medium CPI and the trim and the core CPI data that's going to be released on Tuesday. So we don't have any major news or any releases that's going to be released during trading hours tomorrow, but we do have this economic data that could shape some price action that we see pre-market tomorrow morning around 8:30. So it's going to be interesting. Getting excited just talking about it. All right, so like I like to do the trader's creed. If you know me, you know. So we're going to do from the top before we get to the charts, because psychology and mindset is most important, but none of that matters if you don't know the day type or the environment that we're in. Okay, so from the top, the trader's creed. Shout out to Mark Douglas. You ready? The trader's creed. I am a consistent winner because I objectively identify my edges. I predefine my risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. All right? Remember this, get familiar with this, save it, study this, all right? As this part here will make sense on your trading journey as you navigate through this market we call an auction, all right? Now let's hop over to the charts. Now, what do we have here, guys? Let's make this quick. Excuse me. Bear with me, guys. I feel a little down. And so I have a little drop throat, but we're going to get through this video because that's what we came here for. All right, now I want to actually start on the weekly real quick, and we're going to mark down, we're going to bust down and go all the way down on what I'm thinking, okay? All right, first and foremost, we have a weekly chart here, all right? We have our low and our highs. As true market structure, we can see that we're in a bear trend or a bullish trend. Let's see real quick, all right? This is an established low, this is an established low, and this is an established low. Right now we have higher lows. All right, so technically that is still bullish structure, and I would not turn overly bullish unless we broke below 568 on the weekly time frame, which could be a pullback zone. So if we ever broke below this weekly range of 576, then I will be targeting 568. Okay. All right. Now, as of now, we are above the 21, but we are not creating higher highs at this point. We are right at the cusp of what looks to be a head and shoulders pattern. These are the Heikin-Ashi candles on the weekly. They are not my best indication for puts or calls. However, it's just an add-on to other confirmation and tools that I like to use to get rid of the noise. Okay, and so I wait for structure to change and a green one to maybe pop over this simple line on the weekly, and I will like to swing calls above 599.26. 599.26 on the weekly is an algo number for calls. 599.26 on the weekly is an algo number for calls. So if you're a swing trader and you want to trade based off the weekly, this will be one of the time frames that you use, and look for the open range breakout and use the daily ATR. So now that we have a high on the weekly, we have a low of 575 and a game plan around that. Let's mark up these spots. We have a red chart, a red line, horizontal line. signaling puts, and the green above the weekly signaling calls. Anything in between here is a range, and with 588 being the medium of this 100% move. The red line being 0, the medium 588 being 50% mark, and the top of the green line open range breakout here, the gamma squeeze where we meet here, right, where buyers and sellers agree, and we have a balanced market right there at 599, that high. This would be a 100% mark. So again, you have right here, follow my cursor, 0, 50, and 100%, right, in thirds. Now, let's just put as a yellow line for medium. We can use yellow, right? This is our medium, because that's the median way out of the standard deviation, right? So we're gonna make that yellow. Now let's bust down to the daily chart and see what we see. Now, anytime I mark on my charts, I like to start on the higher time frames. We want to think macro. We want to think macro, guys. Let's trade like the banks, right? Let's trade like the banks, okay? Now, here are my lines here. My same lines on the daily. So what am I looking for? I'm looking for a break here, okay? Looking for a break here, and I want to target the highs of 610, all right? We get a break of 599.36 on the daily. Hope you guys are writing this down or paying attention. 599.36 on the daily. If that breaks, holds as demand, I want to target the highs with time on my contract around, just be more specific, right? Because we don't like to guess or gamble. Those highs are 608.43, so I would probably not be greedy and just target 605, 606, or 607. All right, now this is what we have so far. Now let's go back down. We still busting down the charts. Let's move to the 4 hour. Let's see what we have here. All right, we see the same lines. All right, now I love the 4 hour for the day, for a day trader. Some people use it for swinging. I'm telling you, I like it for day trading, very powerful. All right, we see those same lines. All right, so as of now, we could very well retrace back here. Okay, there's a parallel channel. I want to go and tag that low. You see how I just did that low? Okay, I want to tag that low right here. All right, grab this low, and I want to take the top of the parallel channel to these wicks. So it's kind of off a little bit. We can adjust it just a little bit. All right, there we go. Now, what am I looking for? What am I thinking? Well, I already know that price has bounced from 575. We already know that we left the medium of 588. We are above the 21. All right, we created some sort of flag here. All right, so now we are at the cusp of what they call a W shape. We have a big one, we have several of them, right? W, we have a fail pattern. Right now we have another swing, we're retesting these highs. All right, this whole 4 hour chart has been a test and retest type of range, okay? We go from one extreme to the next, one extreme to the next, one extreme to the next. Now that we're here, and you just followed me with your ears, mind, and spirit listening, a possibility is that we could drop here, right? Come back down and retest 588 for maybe a possible bounce scenario to the upside, right at this 50% mark, or we could stop here, consolidate, and we could drop to these lows, okay? A couple different scenarios, because there's profit taking that can occur. But what if you're overly bearish, right? And you try to, let's say, buy some calls buy some puts around this area here, because it'll be a break of this candle here where I'm hovering at. All right, let's say that this is a area for you to buy puts, but you get trapped because you're overly bearish, because this is a drop down range right above the 21 that you didn't notice, right at 590, because 590 is a algo number, right, for gamma squeeze to meet. It's a demand level, a previous demand level. And if it drops to 590 the same way it did here, it could possibly bounce, because this was a strong demand. But you wait for confirmation of price, all right, in bullish structure, which would create a higher low. If we fall back and we create a higher low than this previous low my cursor is on, which is 590.29, all right, a higher low would be 591, 592, and 593, and 594. Right now we are at 597. So those are your levels: 591, 592, 593, and 594. Tomorrow when the market opens, now you're going to be thinking to yourself, hey, these numbers can serve as a reaction, as an algo number. okay, for calls or puts. Your job is not to predict, but to maybe react if you're not already in calls. Okay, that's for that. This is for this portion, the downside portion, right? Now, if we wake up in the morning, 8:30 comes, and we talked about that data that comes out at 8:30. When those numbers come out, for my years of trading, I've noticed that the data comes out and it affects the market. And there are millions of traders watching for this data. And to be honest with you, the data is already baked into the charts. Okay, so this is a casino, this is a game, and you have to gather information and data. And it depends on who you are, what information you have access to, how much money you have, and your level of sophistication when it comes to this market. That's what's going to be the game changer. So I suggest you find a mentor and understand this sentiment into technicals and the fundamentals that all align when you're dealing with this market. A combination and a mix of all of them makes you a much sharper trader, okay? So with that said, what if you wake up and we are above here? Well, that would indicate that we have a gamma squeeze. We have a break of a high, an open range breakout, breaking all-time highs. However you want to slice it up, we have buying pressure to the upside. Buyers and sellers are agreeing, and we have flow in the market, order flow. All right. So if we was to break above, specifically on the 4-hour, 599.36, then that's exactly what that means. I would check the option chain, open interest, and volume, and also the volume and the gamma squeeze on that number to see how many people are participating. Okay, that's the upside. All right, because we don't know. So now if we wake up in this drop down and you're looking to maybe take advantage of actually buying when things maybe drop, and you want to maybe buy here for the upside, now you could be thinking to yourself, this area here is a place that you can maybe secure your profits because we rejected there before. If we stay above it, you can just target that high and this high and that high, right? And set an appropriate stop loss, and as it moves up, you secure your profits. All right, as it moves up, you secure your profits. These local areas to the left are your potential targets. Okay, guys. And last but not least, I want to say this. I want to go to the hour. All right, I want to go to the hour because I want you to understand that we could retrace back to the downside around 595, 594. And this would give us a chance to get a good risk to reward for calls if we can hold at this 596, 595 on an hour. There's a possibility that we could break here. Let me turn on the candlesticks, and so you can see the gaps that I see. Okay, you can see the gaps that I see. Let's throw in the volume profile. All right, that's the volume profile. Okay, we have a gap here at 592. So that's a possible gap fill to the downside. I would take a trade, and I would definitely buy 590, 592 puts and hold it if we break below this 21 successfully and close below it. This is my trigger for puts. All right, the same way it happened here. See this? The same way it happened here. I want to do that to fill these gaps and target. But there are other gaps here. There's also a gap range, right, at 595, at 594, which is one of my areas that I said that I would like to buy calls at. 594 is a good area. And if that area breaks, boy, oh boy. If this area breaks, then I want to target 590. And I want to target, yes, 590, 592, and 593. If 594 breaks, I'm going to target all the numbers below for us to go right back to where we bounced from at 590. It's all an auction in a casino game, okay? This entire move here is a box range. The things that I'm talking about are all saying the same things. We're just looking at them different ways. Isn't it nice to have the confirmation? Isn't it nice to know that we've already set these numbers and set these to align with our thesis? Okay, because once we mark these charts on a higher time frame, and as we move down, you see the same numbers, you see the same lines. This red line is the line we put on the weekly. Remember, we marked up the horizontals on the weekly. Then we put this yellow line here. All right, we put this yellow line here for the median. Remember, around 588, and then we put this green line for 599 on the weekly. And you see all of that right here. And so that's how you can see the potential for us to drop down all the way back here. and to watch for breaks of market structure. And this would be one here. This would be right here below this parallel channel here, this white line right here, below that channel. Okay, I would buy puts with my eyes closed to ride it back down and fill these gaps here. I'm telling you, that's just what I would do. Okay, and so right now we have more of a bull flag. Let me remove everything off of this chart. Okay, make it bare. Last but not least, I want to show you the volume profile. The volume profile says right now on the hour that we have some bullish structure with choppiness around the point of control. The point of control is sitting right at 598. Again, that same number keeps popping up. All right, and so right now, if we can get above 598 and continue higher, we can create this bull flag measure move. All right, for a breakout pullback. Bull flag measure move. That's what I'm looking for to retest some of these all-time highs. And it doesn't have to happen, but I am looking for that move. If we can continue momentum and break above the point of control, that's what I'm looking for. Okay, if we cannot break above the point of control and we teeter below 597 on the 1 hour, then I would want to target 596 to secure my profits. Then I want to react on a smaller time frame like the 5 minute right here at 595 by the 21 SMA. I'll trigger for calls or puts for a high probability setup. If we break below the 595, then I want to target this thin zone. There's no volume. And if you don't know, quick reminder that these gold and blue bars are the volume of traders and big money traders. And so the bigger the bar, the bigger the gold bar, that's what the control is, which is why this green line is the control, point of control, POC, because that's where most of the volume is. And they're like volume clusters. And you have low volume nodes and high volume nodes. And there's no volume right here, which means there's an imbalance present. And it acts as a vacuum. A low volume node acts as a vacuum to suck price back down here if we break below our key metrics. Okay, are you with me? Guys, I really want to thank you for watching. I'm going to end that video here. If you found this video at all useful at all right, do me a favor and send to a friend or family and share so that we can keep spreading this knowledge to anyone who wants to take upon this journey with courage and without fear, and to have a family and maybe a mentor that they can follow and trust, because I have proven students and a proven method. All right, so if you found it valuable, make sure you hit the like, make sure you hit the subscribe, and to the next time, peace.